Good morning, good evening, good afternoon, depending on where you are in this world. This is Hedge Lee with a update on a simple trend following method for Bitcoin. I have here a weekly chart with a 50-week moving average. And if you're using weekly charts, you're really looking at not really the small detail up and downs for swing trade opportunities, but really for the trend. You can still do it with a 50-day moving average, but in this case I'm going to use wider scoped weekly chart. If we have it so that we get a inflection point of the 50-week moving average downwards, you can see how it was climbing and then it inflects and moved downwards. Same thing here, it was climbing and then it inflects downwards. Now, if we go back to May of 2012 and say we bought when price crossed to the upside of the 50-week moving average and held it. So yes, we held it to this up and down, to this correction, sizable correction. We held it until price crossed decisively in that it stayed below the 50-week moving average, and that's when we sold. That would have delivered 9,022% in profits. Now note how the crossing of the moving average is in advance of the inflection point. It has to happen that way because it is a declining in the price, which will then have a lateral effect of the declining in the average. Same thing here. Let's say we have another crossing now upside of the price of the moving average. And if we held it through all the ups and downs, all the squiggles and wiggles of the pricing, went to 20,000 and it decisively crossed on May of 2018, we would have made 2,844%. And again, the inflection point came afterwards, after the actual price crossing. So, very easy trend following method would mean whenever price crosses to the upside, it's a buy signal. And you hold on to it until the price decisively crosses below the moving average. Same thing here. The trend ended, the uptrend ended technically at this point. And this method does not precision point the top or the bottoms. In fact, it'll almost always miss it. And that's in a way a good thing. Trend following is not trying to pick the top or pick the bottoms. It's trying to find the trend and stay with the trend and get out of it when the trend changes. So in this case, we bought, held. Here was the peak at 20K. We didn't get out until the price crossed decisively downside of the moving average, and that was back in May, but still booked a 2,844% profit if that was a technique used to buy and sell. Historically, I've covered two cycles of buy and sell. Now, let's look at this. If we see that the inflection point was down here, when will the upward inflection point occur? If we project from the prior correction to that inflection point upward, it took about 56 weeks. If we say extrapolate the same, we can say approximately December of 2019 is when that inflection point will occur. However, the actual crossing of the price of the moving average to the upside may occur earlier to that. In fact, it will occur prior to that, prior to the inflection point. Maybe November, maybe October or September. So the key point is when price rises above, breaches the moving average to the upside, that'll be a major buy signal. Could it happen much earlier to that? Absolutely. It could happen in May. It could happen in April, June, July. I don't know. No one knows. However, the method is saying that if it does, whenever it does, cross to the upside of the moving average, it's a buy signal. We're taking everything on a proportional basis, but not everything always works on that principle. While the price bottom may occur in February, March, or April, I'm projecting that we'll get sideways activity, churning of the price, before it actually crosses to the upside above the moving average to generate that buy signal. So currently there is no buy signal using this trend following method. And that means, what do? You keep your cash on the sidelines safe until ready to have it deployed when that buy signal comes. And I can only imagine what this percent gain white column might represent on that next buy cycle. So again, this is the simplest trend following method. You buy when price crosses to the upside of the 50-week moving average. You sell when price crosses to the downside of that same moving average. Very simple. And then you stay and sit on your hands until you see another buy signal. Now let's flip that and go on the short side. So if you were long here and you sold immediately, then you went and took maybe a short position. You sell short when price goes below the moving average, and you buy to cover when price goes above the moving average. And that itself, the difference of that would still give you significant profits. So let's say you went short here and you're still holding onto your shorts, and you hold it until you get that price going above the moving average. So you can play both the long side and the short side using the exact same trend following method of this 50-week moving average. That is the beauty of this. So simple. It almost gives you a black and white yes or no on the sell or the buy. Sometimes it can go up and down, in and out, in and out. But that is less likely on a 50-week moving average versus, let's say, a 50-day or even a 10-day moving average. It moves a lot more slowly. And much more greater swings in prices required, as well as volume, in order to cause it to go in and out, in and out. And that is very unusual on a 50-week scale or degree of trend. Now, cycles are a phenomenal method to follow the same trend. But you have to have greater degree of expertise, greater degree of being able to assess data and inputs, sentiment, support, resistance, before pulling the trigger. It's not as black and white. However, it does jive very well to this method. Why? Because cycles is designed to follow the trend as well. You can use the same method except maybe with a 10-day moving average. Buy when it crosses to the upside, sell when it crosses to the downside. Short when it crosses to the downside, cover, buy to cover when it crosses to the upside of the moving average. Very simple. The only thing is, with the 10-day moving average, you will be doing a heck of a lot more buying and sellings than using this investor-related mode of buy and sell on a weekly basis, on a weekly degree of trend. Okay, I hope you find this to be helpful. Have a wonderful day.